Never list your business for sale with a real estate agent. Now, we see this all the time while working with the buy side. People list with real estate agents that don't really have any experience selling businesses. I think one reason they do this is really it's just someone they know. You're more likely to know someone who specializes in selling real estate than someone who specializes in selling businesses. And plus, there's a perception that the commission is going to be lower. So real estate agents typically charge a 6% commission. Most advisors or business brokers follow what's called a double Lehman schedule, which just basically bases the commission on the size of the business, but it does start at 10%, eventually goes down to 2%, but it is a sliding scale on what the rate is. So, but in most, especially on the smaller end, let's say $1 million or below, you're gonna see most business brokers charge 10% and most real estate agents charging 6%. Now the problem is that real estate agents just don't know how to list businesses for sale. It's very different than real estate. You're gonna look at different numbers, you're gonna look at a multiple of cash flow or EBITDA rather than doing it on a cap rate. It's not gonna, you can't use things like price per square foot when like a residential broker is going to use. It's gonna be based off of the bottom line cash flow, and understanding what that is and how to recast the financials to get to that bottom line cash flow really takes someone that knows financial statements, understands accounting, understands the language of business. More often than not, when we run into a listing where we see a real estate agent, we see them 5 to 7 times the market rate for that business. And the business isn't gonna sell for 5 to 7 times what all the other similar businesses out there are listed for. And this really comes from a few things. One, they might apply a multiple that's more appropriate for property than for a business. Property has a different risk profile. It has a different amount of activity that the owner needs to do. They're going to trade at different valuations than a business. So if you use the same multiple or the same valuation for a business as you would real estate, you're going to dramatically overvalue that business, and you're not going to bring in any buyers, and you're just going to waste your time with your business on the market and no serious buyers coming in. Even worse is you might have naive buyers that come in and make an offer and then find out that the bank can't finance it. Another common mistake that we see is confusing gross profit with a bottom line net profit. We see that happen all the time. They might list a restaurant for sale and they'll think that the gross profit is the bottom line. And okay, so restaurants trade at 3 times the cash flow, so they're gonna do 3 times that gross profit. That's not right. It's 3 times the bottom line cash flow. It's gonna include rent and other administrative costs and wages, and there's a lot more that goes into those expenses than, say, just the food cost. So again, that would way overstate the earnings power of the business to use the wrong financial metric, and then you're gonna end up overpricing the business by probably 4, 5, 6, 7 times. And that's just gonna waste your time as a seller. And lastly, one of the most important things is that you need to work with someone who really understands how to present your information. Most real estate agents that we see trying to sell businesses, they throw out a lot of documents that aren't really the relative ones. Really, obviously the biggest things are gonna be your big 3 financial statements, your profit and loss, your balance sheet, and your statement of cash flow. Like, those are the 3 most important things. Your tax return should prove out your financial statements. If you go and look back at prior years, you should see a similar number on the tax return as you do in the profit and loss, assuming you're looking at the same accounting styles, cash and accrual. So don't do it. You're gonna look bad because your advisor is a representation of you. If your advisor is sloppy, you are sloppy. So if you hire someone that doesn't know how to list the business, that's gonna fully reflect on you and your business. Even if you run the tightest, most perfect ship, if your advisor is sloppy, you are sloppy. And that's gonna be the only thing that a potential buyer can think, and they're not gonna be able to get past it. So if you need help preparing your business for sale or selling your business, check out the link in our bio and we can help.